Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Bert, the Hitman, the Hurt, the one, the only, and Lanny, your boys here, guys. The best dividend investing channel out here on all of social media, YouTube, Twitter, X, you name it, we're there. You want it, we're here. So, Bert, is it time to move on from these two stocks? Are they finally at the price where it's time to hit the sell button and redeploy the capital into higher quality assets here?
Before you hit the sell button, everybody please help us out. Hit the subscribe button. Give this video a thumbs up. Let's see if it's time for Laney to kick these two positions to the curb and say, get the bleep out of my portfolio. Whew, we are always in the mood to trim down stocks, especially in 2024. That is the name of the game. Cut down your positions. Focus on building core positions that are going to help you grow your passive income stream so you can buy those stocks and reach financial freedom.
Yep. Thanks, Bert. And, again, we're filming this here on September 19th, Thursday night, guys. You know, it's all been positive lately. We're trying to get away from the selling, the doom and gloom and over here, but I got to bring back the two stocks that, I've been looking to sell for the better part of, well, over a year for sure. One stock has really popped this year. One stock is starting to pop again over the last month, which is very exciting to see. One stock doesn't pay a dividend. One stock reduced their dividend post a spinoff, which now the yield is a lot lower than what they used to be. So I'm not going to sugarcoat it. I'm not going to sandbag it. Again, Fed just cut their rate, and I'm hoping maybe that's going to bring a little bit more juice to these two stocks. Maybe not as much juice as Bitcoin has been getting lately, but you know what? It's all about trying to get there and staying always ready. No Matt Cardona, and let's talk about it.
Yeah. Let's talk about
Let's
one of
talk.
these stocks is going to be like, when the battery is, you think it's out and then you take it out and you shake it up a little bit and you put it in. You're like, oh, this thing's got some life to it. Cannot wait to talk about these stocks and see if it's time to sell these stocks, get rid of these stocks, get them out. Ooh, one of these is a dividend king. And as you said, Lanny, one of them's coming back. You want to do the honors? You want to go one by one or
Yeah,
same?
we'll go one by one. So first, let's talk about 3M. Let's talk about the prior, the old dividend, the king that lost his crown, no longer the king of kings. 3M company,
No
guys.
bueno.
Again, quickly going through some high level metrics. They currently have a PE of about 18 based on forward earnings, a payout ratio that's below 39%, a negative dividend growth rate because they reduced that dividend earlier this year with the Solventum spinoff. But if you still hold it, it could be a time to exit. Um, and the yield now is 2.09%, which is less than half of what the 5-year yield is at 4.9%. Now, Bert, what has the stock price done this year in different time tranches, if you if you
Not
can?
1%, not 2%. So year to date, it's up 45.53%. Last 6 months, it's up 52%. In the last month, it's cooled off a little, but it's only up 5.32%. So it's been doing pretty well. And with that, Lanny, you've been able to swing it from a loss into a very nice, decent sized unrealized gain now for the position, right? You're sitting on some gains.
Yeah, $274 and
All right.
49 cents right now to be exact on 3M company. Again, this is a stock that went through hell. It got through the earplug lawsuit. They were in the 80s, 90s, and now they've climbed their way back, right? They've gone up over 50% in the last 6 months, still up 5% in the last month alone.
Yeah.
Now that the rate cuts are setting in, obviously the first one's going to trickle down. There's a lot of these companies where I'm like, okay, the stock price appreciation should pop. I don't want to get too greedy here, but yeah, 3M to me, hey, not a dividend growth stock anymore. Let's just call a spade the spade. Um, they reduced their dividend because of a spinoff. I'm not gonna, and the yield now has just collapsed to the point where it's like, okay, the payout ratio could take on some significant growth, but can it really climb out this
Oh,
2.09%
I don't
yield?
think it was the spinoff as the reason why they didn't cut it one for one based on what they spin off. The spinoff was the excuse for them to cut the dividend and take it down further. It gave them the door to open through. They ran right through that door to bring it down. And sure, you can say the dividend cut has been working in the short term from the appreciation standpoint since they are up 45% year to date. So you can say something worked when they got it behind it, but as dividend investors that are trying to build that growing passive income stream, might not fit the portfolio anymore. And that's ultimately what is important.
Right. So I mean, Bert, what do you think dividend growth is going to look like for 3M?
It's going to be a few years. I don't see them rushing back into the dividend growth game. I could see them being stagnant for, say, 2, 3 years until they turn it around, get the balance sheet comfortable, and then return back to its modest single to mid single digit percentage.
Yep, exactly. So that's where it's at. It just doesn't fit the strategy. I'm in an unrealized gain. I'm thinking of exiting at or near, $140 a share, which actually isn't too far, just a couple more percent from where we are. Have a quick exit. We'll talk later about where I think I could still deploy it, depending on where that price point is. Um, but there's two stocks here that I wanted to talk about to see if it's time to move on. But before we do, let me know your take, guys, on 3M. Is it time to dump this stock, or do you see more price appreciation coming in the short term now that the Fed cut its rate by 50 basis points?
Number
Um,
two.
or what's
Number
number two?
two. It's not a dividend king. It's a spinoff from the former dividend aristocrat who lost their title too. Warner Brothers Discovery, ticker symbol WBT. Everyone's going to pull up the charts while we're talking through this and be like, Lanny, what are you talking about? They're not doing well right now. They're down 28% year to date. They're down 1% over the last 6 months. But the story with Warner Brothers Discovery, Lanny, is they're starting to work it back. They're starting, maybe they hit that valley and are starting to turn upwards here because they are up 10% in the last month. So you're finally getting that positive momentum swinging back up where you may be able to unlock some semblance of an exit price for a position that we have both hated for several years now.
Yeah, they got the battle right now with the NBA over the rights to that. Um, but they did strike a long-term early deal with Charter for their package right now. I believe somebody can quote me on that. And that's kind of what sent the share price kind of rising over the last few weeks, guys. And at one point, I'm actually not even thinking about when they first were spun off, which is when we should have at least dumped it. But they were caught up in the meme craze back in 2021. And in March 19th, they were trading at $77 a share.
Disgusting. I don't even
I
want to.
hate I hate even talking about it. So
You had
again, right now there's projected negative earnings. Obviously, they don't pay a dividend, no dividend growth, but they are up 10% in the last 30 days, guys.
to.
And I'm in a negative, an unrealized loss of about 1600. Currently, year to date, I am in a realized gain on stock sales I've had this year that I've exited of 1.1K. So between the two, we're almost at 1300 unrealized loss between 3M and Warner Brothers Discovery. So that would definitely offset,
Yeah.
a gain. And that's why,
You're not paying taxes on this transaction. So that's a huge component of this.
huge component. So that's where I'm at with it. It's up 10% though. Even if it rose another 10%, that's only another $160 you could say.
Yeah. What are you
That
holding
would,
on to it for if you don't feel like it? And if you have enough gains to offset with this, not a bad move to take some taxes and get unlock some benefit from there.
yeah, I mean, because yeah, that's essentially where I'm at. Is it $9 or is it $10 a share where my exit price is for Warner Brothers Discovery right now to really get that nice even split sayonara before the end of the year? What
Yeah.
would you guys do with Warner Brothers Discovery now that it's up 10%, but it's still down 28% this year? Like Bert, what's your thought?
I mean, I think it's time to see where streaming is going to go. As bad as this sounds, Paramount finally made its move. It was exhausting. It took forever to get there, but Paramount finally did something. And
Yeah,
sometimes
yeah,
some
great.
yeah, and we don't know how it's going to shake out, but in a sector that was slumping, right? The sector was just getting pummeled. Everybody was getting taken down. Sometimes somebody has to do something. How that benefits and shakes out, it doesn't know, but the snow globe was shaken. Something's going to settle, and maybe Warner Brothers is going to have some kind of move that makes to unlock future value, or it could be a dud, and it could just keep dropping down in the long run. This could have been your chance to get out. It can go either way. I never said what Paramount did was going to have great unintended consequences. It can go the other way, but something happened. I don't know.
Yeah. And obviously, I still have a few months ahead of me. Again, another 10% on Warner Brothers would be nice. I know it sounds pretty bullish of me, but 10% is getting up to from 840 to a little bit over $9 a share. So it's not like I'm asking for the moon here.
Right. So you talked about 3M being at 140, another 10% of Warner Brothers. There's always the other side of this equation, though. What are you going to do with the cash? And you said you had some
Well,
ideas, you had some thoughts, so
you're,
share them with the
you're
community.
You're right. You guys have been pretty big and bullish on Pat Carr. I was buying them, between 92 and $95 a share pretty much, about a month or so ago. There's, even though they've popped now about 6 or 7% in the last, since I've been buying them, just under $100 a share. I still think that's undervalued for Pat Carr. So that's kind of where I would redeploy this capital like immediately. Some of it or all of it. And if I do some of it, then the rest would probably go to my Vanguard high dividend yield ETF. Because guys, I'm trying to get to financial freedom. So that's my freaking goal. Locked in.
There you have it, everybody. Let us know what you think. Would you sell 3M and Warner Brothers? If you would you deploy the capital on PACCAR? Let us know in that comment section down there below.
Subscribe to this gosh dang channel, guys. Like this video. And I got one thing left to tell you, jabronis. You're either with us or you're against us, Jack. That was Bert the Hurt Lanny from the Dividend Diplomats. Over and out.